Hello everyone and welcome to the EcoInvestment Update Year-End Edition 2018. It is Sunday, December 30th, 2018. It's been a very fascinating and a destructive market move for the month of December here in the principal equity markets, and a move that went very counter to the tradition of having Santa Claus rally in December being a strong month. And now we're coming up to the month of January, especially early January, where we have a very strong flow of new pension monies, new retirement monies come flooding into the market. So it's another time where we should have traditional strength. Several people wrote me over the last couple of days asking me, in light of the huge 1,000-point rally we had one day, if this signifies the end of this bear market where we almost reached down 20% in terms of losses, and whether a new upcycle has begun. And the short answer is time will tell. It always does. One thing is for certain: when a market starts down, and I don't care how steep the ascent is, how scary it is, how volatile it is, sooner or later, especially if it's coming off of an all-time high, there will be a frantic and sometimes sustained attempt to make a new all-time high, which reinforces the theory that bull markets don't fail on declines. They fail because rallies back to the old highs fail to achieve the old high. A reversal sets in, and then you begin a series of lower lows and lower highs as each rally carries to a lower level, to a lower higher level, and each decline probes new lows. Well, we reached extremes of oversold on Wednesday morning, the past Wednesday morning. So it's not unusual that you're going to have an exhaustion of selling, and that's going to set up a reversal such as occurred, and it's going to be in scale with the decline that preceded it. In other words, you had a 5,000 point drop off the top, so it figures that you're going to have at 5,000 points in a very short period of time. So you're going to have a rally that's in scale with that decline. It's going to be a historically huge rally, which we had. And rallies in bear markets can be very sharp and very large, and they can shock people with the magnitude. Also remember that a bear market doesn't mean that more down days and up days. In fact, it's almost always equivalent. It's just that the down days are much larger in scope of point loss as opposed to the up days in bear markets. Okay, so something worth keeping and wrapping your mind around. So, although I did take the opportunity to cover some short positions, one thing I can be pretty sure of is that we're going to have a retest of this low that occurred just below 22,000 on the Dow. And depending on how that resolves itself and how quick we do that retest, unless this was a super V bottom and we're going to go off to new highs, I'm going to take a look at that very carefully and try to make a judgment about whether that's worth riding. Okay? We have to look at the fundamentals in terms, and this is what confuses people too. They look at the strength of the economy and it doesn't jive with the market that literally collapses in the month of December. They scratch their heads. So, but remember, markets are always out of synchronization with what you see in real time in the economy. The markets are looking ahead. They could care less about what Amazon's earnings are or what Macy's going to do on the holidays. They're looking ahead to see what's coming. And we have structural issues with deficit. We have issues with the federal shutdown. We seem very intransigent on both sides. Neither side wants to give in to Democrats or the president. So we could have a sustained blow to economic activity there. We have debt piled upon debt. You go to buy a car today, there's the 5-year car loan is a thing of the past. Now we're out to 10-year, even 144-month financing. Think about that. Think about that. 12-year car loans. I mean, you're almost taking out a mortgage now to buy a car or a truck. It's unbelievable. And that's giving manufacturers a chance to keep their pricing high, because let's face it, when people go to buy a vehicle, they're buying a monthly payment at the end of it all, but they're also saddling themselves, chaining themselves to a cross of debt for years to come. And we have a society now that's just riddled with debt. We have the trade wars still going on and unease on the international front. We have outright recession in China. So we have to be careful feeling, if we have that false feeling of being super insulated here. It's going to be a bit interesting month of January. We'll see the metals have acted very well. The precious metals over the month of January, they were the standout leaders. We're just going to keep an eye on them going forward too. Okay, thanks so much for watching, and Happy New Year to you, and see you soon.